Fraud, a global issue, casts a particularly long shadow over China. From intricate financial schemes to counterfeit goods, it permeates various sectors of the Chinese economy and society. It preys on businesses and individuals alike, jeopardizing financial stability and eroding trust. While China has achieved remarkable economic growth, fraud poses a persistent challenge. Understanding the nature, extent and impact of fraud in China is crucial for developing effective countermeasures. This essay delves into the multifaceted world of fraud in China, exploring its historical context, analyzing its prevalent forms, and examining its profound impact. It will shed light on the financial and social consequences of fraud, from undermining investor confidence to jeopardizing individual livelihoods. Furthermore, it will discuss the strategies employed by the Chinese government and businesses to combat fraud, highlighting both the challenges and successes in this ongoing battle. By understanding the various dimensions of fraud in China, we can better equip ourselves with the knowledge and tools to mitigate its impact. This exploration aims to provide valuable insights for policymakers, businesses, and individuals alike, fostering a deeper understanding of the challenges and opportunities in combating this pervasive issue. Fraud exacts a heavy toll on China, both financially and socially. In financial terms, fraud drains billions of yuan from the economy each year, undermining economic stability and sustainable growth. Businesses, particularly small and medium-sized enterprises, often bear the brunt of financial fraud, suffering significant losses that can hinder their operations and growth prospects. Moreover, fraud erodes investor confidence, making it more challenging for businesses to attract capital and expand. The social costs of fraud are equally significant, if not more so. Fraud breeds distrust and suspicion, eroding the social fabric that is essential for a harmonious society. Victims of fraud often experience financial ruin, emotional distress, and a loss of faith in institutions. The Chinese government recognizes the severity of the fraud problem and has taken significant steps to combat it. These efforts include strengthening legal frameworks, enhancing regulatory oversight, and promoting public awareness. The high cost of fraud in China underscores the urgent need for a multi-pronged approach that involves collaboration between the government, businesses, and individuals. To fully comprehend the challenges of combating fraud in China today, it is essential to delve into its historical roots. Fraudulent practices have long plagued Chinese society, evolving in tandem with the country's political and economic transformations. From the ancient dynasties to the modern era, fraud has adapted to exploit vulnerabilities within each system, leaving its mark on the nation's development. During the imperial era, fraud was often intertwined with power dynamics and the centralized bureaucracy. Tax evasion by wealthy landowners and merchants was rampant as they sought to minimize their contributions to the imperial coffers. Corruption among officials was also commonplace, with individuals leveraging their positions for personal enrichment through bribes and embezzlement. The establishment of the People's Republic of China in 1949 brought about a dramatic shift in the country's political and economic landscape. The socialist system, with its emphasis on collective ownership and centralized planning, created new avenues for fraud to flourish. Manipulating production quotas to exaggerate output and secure greater rewards became a common practice. The rapid expansion of the market economy, coupled with initially lax regulatory frameworks, provided ample opportunities for unscrupulous actors to exploit the system. Recognizing the urgent need to address the growing threat of fraud, China has built a comprehensive legal framework to combat these illicit activities. The cornerstone is the criminal law of the People's Republic of China, outlining offenses related to fraud and economic crimes. Penalties include prison sentences, fines, and asset confiscation. In the digital age, China has implemented legislation to address cybercrime and protect data security. The cybersecurity law, enacted in 2017, establishes requirements for data protection and network security. Enforcing the law, key agencies and their role. While establishing a robust legal framework is crucial, its effectiveness hinges on the ability to enforce the law and bring perpetrators to justice. China has entrusted this critical task to a network of specialized agencies, each playing a distinct role in combating fraud and upholding economic integrity. These agencies work in coordination to investigate, prosecute, and deter fraudulent activities across various sectors. One of the key players in this fight is the Supreme People's Procuratorate, which holds the authority to initiate and oversee criminal prosecutions. The Supreme People's Procuratorate plays a pivotal role in investigating complex fraud cases, gathering evidence, and presenting cases in court. Another crucial agency is the Ministry of Public Security, which shoulders the responsibility of maintaining social order and combating crime. Within the Ministry of Public Security, specialized units focus on economic crimes, including fraud. These units conduct investigations, apprehend suspects, and work closely with the Supreme People's Procuratorate to build strong cases for prosecution. In addition to these law enforcement agencies, China has established specialized regulatory bodies to oversee specific sectors and industries. Financial frauds, shaking the foundations of trust. Financial frauds destabilize markets and erode public trust. These schemes prey on individuals' aspirations for financial security. From Ponzi schemes to loan fraud, tactics deceive victims and siphon money. Loan fraud involves misrepresenting financial status to secure loans. Ponzi schemes promise high returns but collapse when new investors dry up. The Izubao case defrauded investors of $7.6 billion, highlighting the impact. Corporate malfeasance, eroding confidence and competitiveness. Corporate fraud, driven by profit over ethics, impacts businesses, investors, and the economy. From accounting irregularities to insider trading, malfeasance erodes trust and competition. The Luckin coffee scandal highlights the severe consequences of deceptive practices. Chinese authorities are cracking down on insider trading to protect market integrity. Digital deceptions, navigating the perils of the online world. The rise of the internet has created unprecedented opportunities for innovation. However, these advancements have also opened up new avenues for fraudsters. From e-commerce scams to sophisticated phishing attacks, digital deceptions pose a growing threat. E-commerce platforms have become breeding grounds for fraudulent activities. Counterfeit goods flood online marketplaces, deceiving consumers. Scams involving fake online stores and phishing attacks pose significant risks. Economic costs, a drain on growth and prosperity. Fraud, a silent predator, inflicts significant financial damage, siphoning off resources that could fuel growth. It undermines investor confidence, stifles innovation, and diverts resources. The economic costs of fraud impact businesses, financial institutions, and government services. Financial losses from fraud are significant, affecting potential investment and job creation. Social costs, eroding trust and undermining social cohesion. Fraud erodes trust, fuels cynicism, and undermines the social fabric that binds communities together. Trust is the foundation for cooperation and fair dealing. Widespread fraud chips away at this foundation, leaving suspicion and skepticism. It erodes trust in institutions, creating cynicism and apathy. This leads to a decline in civic engagement and public participation. Victims of fraud experience betrayal, shame, and vulnerability. They may lose their savings, homes, or businesses, struggling to rebuild. Beyond financial losses, victims face emotional distress and social isolation. Widespread fraud desensitizes individuals to unethical behavior. It normalizes dishonesty, making ethical behavior seem like a liability. Section 3. The human cost, lives upended, dreams shattered. Behind the statistics lies the deeply personal and heart-wrenching human cost of fraud. For every instance of financial manipulation, every counterfeit product sold, every online scam, there are individuals and families whose lives are upended, their dreams shattered. The human cost of fraud transcends financial loss, leaving deep emotional scars and a lingering sense of vulnerability. Consider the elderly couple who poured their life savings into a Ponzi scheme, only to see their nest egg vanish overnight. Their golden years, once filled with joy, are now clouded by anxiety and financial insecurity. Or imagine a young entrepreneur who secures a loan to launch their dream business, only to discover it was fraudulent. Their business collapses under debt, leaving them feeling defeated and burdened by a sense of failure. The human cost of fraud extends beyond the immediate victims, affecting families, communities, and society as a whole. Leveraging innovation for fraud detection. In the digital age, traditional methods of fraud detection often prove inadequate. China is turning to AI, big data, and blockchain to combat evolving fraud tactics. These technologies offer a powerful arsenal in the fight against fraud. AI analyzes massive datasets, identifying patterns that elude human analysts. AI-powered systems flag suspicious activities in real time. Early detection helps prevent losses and minimize damage. Big data analytics provides the raw material for sophisticated fraud detection. Aggregating data creates comprehensive profiles, identifying anomalies. Insights help institutions and law enforcement take preventive measures. Blockchain offers transparency and immutability, preventing various types of fraud. It creates a tamper-proof record of transactions, ensuring authenticity. Section 2. Regulatory oversight, strengthening the shield against fraud. Technological advancements provide powerful tools for fraud detection, but robust regulatory oversight is essential to maintain the integrity of China's financial system. The Chinese government has implemented comprehensive measures to strengthen oversight and enhance transparency. The People's Bank of China plays a pivotal role in setting and enforcing regulations to combat financial crime. Key initiatives include stringent anti-money laundering measures. The State Administration for Market Regulation oversees corporate practices and protects consumer rights. SAMR investigates accounting irregularities and insider trading. The Cyberspace Administration of China regulates online content and combats cybercrime. The agency cracks down on online scams and phishing attacks. Public awareness, empowering citizens in the fight against fraud. Public awareness is crucial in creating a vigilant citizenry capable of recognizing and resisting fraudulent schemes. The Chinese government, in collaboration with financial institutions, has launched campaigns to educate the public about various forms of fraud. These campaigns use traditional media, social media, and community engagement to reach a wide audience. Public service announcements highlight common scams, like phishing emails and online shopping scams. Social media disseminates infographics, videos, and articles with practical tips on avoiding fraud. Dedicated hotlines and online reporting mechanisms allow individuals to report suspected fraud. These channels provide a safe way for citizens to share information, aiding investigations. Active public participation creates a network of vigilance, making it harder for fraudsters to operate. Public education campaigns also promote financial literacy and cyber hygiene. Individuals are encouraged to adopt safe online practices and make informed financial decisions. The price of dishonesty. China's legal system adopts a firm stance against fraud, reflecting the government's commitment to maintaining economic order and protecting its citizens. Penalties for fraud range from hefty fines to lengthy prison sentences, serving as a powerful deterrent. These legal repercussions are actively enforced, sending a clear message that fraudulent activities will not be tolerated. At the heart of China's legal framework against fraud is the Criminal Law of the People's Republic of China. This law outlines various offences related to economic crimes, including fraud, embezzlement, and corruption. Severe cases of fraud can lead to life imprisonment. Section 2. Case studies, lessons learned, justice served. China's commitment to combating fraud is demonstrated through the resolute prosecution of high-profile fraud cases. These cases serve as stark reminders of the consequences of fraudulent activities and the determination of Chinese authorities to bring perpetrators to justice. The Ezubao Ponzi scheme defrauded 900,000 investors of $7.6 billion. The case exposed vulnerabilities in China's online finance sector and led to stricter regulations. The Luckin Coffee scandal involved fabricating billions in sales, leading to massive investor losses and delisting from Nasdaq. The GSK scandal involving bribery resulted in a record-breaking fine and prompted corporate governance reforms in China. Section 3, Corporate Governance, Building a Culture of Compliance. Combating fraud requires more than just punitive measures. It demands a fundamental shift in corporate culture. In China, the focus on improving corporate governance has intensified, driven by high-profile fraud cases and increased regulatory scrutiny. This shift involves strengthening internal controls, promoting transparency, and empowering individuals to speak up against wrongdoing. Strengthening the role of independent directors on company boards is crucial. Independent directors provide oversight of management's actions and bring an objective perspective. Increasing the number of independent directors can help prevent fraud by reducing conflicts of interest and promoting accountability. Transparency is another cornerstone of a strong corporate governance framework. Clear financial reporting and open communication with stakeholders enhance trust and deter fraud. Creating a culture where employees feel empowered to speak up against unethical behavior is paramount. Implementing robust whistleblower protection mechanisms is essential. Whistleblower hotlines and clear policies protect employees and encourage them to report wrongdoing. Section 1, a collective effort for a secure future. Fraud, a persistent challenge in China's rapidly evolving economic landscape, demands a multifaceted and adaptive approach. This essay explores the complexities of fraud in China, examining its prevalent forms and impact on society. From sophisticated financial schemes to counterfeit goods, fraud preys on vulnerabilities. Combating this issue requires a collective effort, uniting government, businesses, and citizens. It necessitates robust legal frameworks, technological solutions, and a commitment to ethical conduct. China has made significant strides in recent years. The government's efforts have yielded tangible results. The crackdown on fraud sends a clear message. Fraudulent activities will not be tolerated. However, the fight against fraud is far from over. As technology advances, fraudsters will continue to adapt their tactics. This ongoing challenge demands vigilance and adaptability. Section 2. Towards a more resilient and trustworthy China. Building a fraud-resistant China is about creating a resilient, trustworthy, and equitable society. Ethical conduct must guide business practices and social interactions. This requires investment in technology to detect and prevent fraud using AI, big data, and blockchain. Strengthening regulatory frameworks and enhancing transparency are crucial. A shift in mindset towards ethical conduct is necessary for sustainable growth. Fostering a culture of compliance within businesses is essential. Empowering consumers with financial literacy and digital awareness helps protect their finances. The pursuit of a fraud-resistant China is vital for economic prosperity and social justice. Together, we can create a secure, resilient, and trustworthy China for future generations.